Hello and welcome to Macro Mondays brought to you by David Gockstein. I'm your host, Landy, and today is August 10th, 2026, and we're looking at Bitcoin here on the weekly. And we're specifically on the weekly because I want to talk about structure on the weekly for a moment, as well as some of the confluence that we see with the Bollinger Band levels and the support and resistance levels that I'm going to show you in just a moment, as we do have some, significant alignment, much like I had talked about last week, but even more so this week. So Bitcoin, of course, is in lower low, lower high structure on the weekly, but is going sideways. And it is above the lower first standard deviation of the Bollinger Band set, with the basis band right overhead at $69,000 or just above $69,000 at around $69,130. And Bitcoin's kind of directionless right now, even on the daily, but of course, a bunch of inside bars on the weekly here. So let's zoom in and take a look and define some criteria. This is going to be pretty easy criteria, right? Take out the lower high. Awesome. We're probably going to go up and test, 68 to 70, potentially more into the mid to low 70s. Above $70,000, it's kind of $2,000 at a time. 68 to 70, 70 to 72, 72 to 74, 74 to 76. And of course, if Bitcoin were to do that, with this current structure in place right now, if we did see a close above the $67,000 high, I'll be honest, you'd probably want to see the weekly close even above there at around that 67 260 high right there. Work its way to the 68 to 70 region around the basis band, and then try for a push up to the upper first standard deviation of the Bollinger Band set here, which is coming in line with this high over here, right around $76,000, right? So again, I would take it $2,000 at a time if we did see Bitcoin break out above around $67,000, as there is overhead resistance right there at the 68 to 70 area. Now, of course, even above where price has been rejecting, we have the low side structure, which is right around $66,000 here, and 65. You can call it 65,800 or so. So again, break out of the local structure here, we'd be clearing the lows and headed to the high side structure over here. You've got 72 to essentially 76 up here. Get above that basis band, especially on any closes. If we haven't seen, the mid 70s, that would be the next logical area to look. Excuse me. Anywhere above there, I would look for a run to the upper second standard deviation. Now, of course, this is not just a weekly higher high. Of course, we had, this little bit of a double bottom with a higher low in place here, pretty much equal lows on a close, but higher low swing. Closed above the lower high trend break into higher high structure. This was a mean reversion all the way back up towards the upper first there above the basis band. Now, of course, this was the monthly test, right? So the monthly is, of course, the close open structure. So after we tested the wicks down here in the weeks prior, we came up and tested the actual close open up here. So we've got, the 82.5, and then we've got the 74.4 area there. So again, you can see we tested in and around that area, rejected, came back up, front run, swing it, higher low structure, and then we worked our way through it, rejected again, finally got above it and worked our way to that monthly for the monthly close open retest, which is now the weekly upper second standard deviation. So again, we've got some areas overhead to pay attention to, right? So as zones, pretty easy to pick out what we're dealing with here. And, I would take this even to the 72 down here. So above that basis band. So we've got like a zone there. We've got the local zone and structure. Obviously, this is going to be a little bit different than the chart that I typically show you because, we're just kind of pointing out some of the major areas from the weeklies here, right? So get above the lower high here on any close. That would be higher low if these lows hold, of course. and then we'd be looking 68 to 70, and then it's really about the mid 70 area, essentially 72 to 76, but there is, of course, the low to be aware of around the 74 area. So kind of the midpoint, right? And then back below the lows and the lower first standard deviation here at 62.5, if even on closes, it can safely swing the wicks, 61, 61.5, it can swing it. But if we see any closes below the lower first, if we haven't already swung it, I'd be looking for the swing with the potential to head down to the actual low side structure, 60, 58, and then the swing, 60. This was 59. Then we got $58,000 on this swing, and then a sweep of it at 57,750. We, from the $80,000 bounce or so right around here, we were looking at any kind of a breakdown here coming to 58 to 60. We got that and a sweep, which is really nice. But if it did continue down, right, because we have a higher high, we have a lower low close, and we have swing structure that is downtrending, right? Lower low, lower high swing, lower low. There was no low set here until we actually closed the mid-July candle here. Then we actually closed above the swing high here and set the low. So even though the swing structure is lower high, lower low, lower high, maybe higher low, but we have a closing lower low, closing lower high here. If we did set this reversal by dropping the low side structure here locally and these wicks, then I would be looking back to the lows and potentially lower to the mid 50s, 54 to 56 to begin with by the lower first, which is sitting right at $56,000 or so. Anywhere below there opens up, 52 to 54, 52.5 to 54, and then potentially down to 48 to 50, where we see the lower third coming in now. I'm not really looking at this as like, oh, hey, like price has to go lower right now or has to go higher right now. It's all about the closes on the weekly and the daily, and in between time frames, 2-day, 3-day, 4-day, 5-day. Just watching those closes as we come into the weekly this Sunday, of course. So let's go ahead and get rid of this for right now and actually turn on the normal support and resistance zones of interest. And that's going to be something interesting because we have confluence across our bands and the weekly areas of interest and potentially monthlies, right? So here we have lower first lining up with the swing low, 62.5. Anywhere below there, monthly zone, 59 to 60 here, 58, which is where the lower band was, and anywhere under there, sure, it can swing it in the, upper 50s, but realistically, any closes below even that monthly, I would be looking right down to that lower second top side of the weekly, 54 to 56, and then, of course, 52.5 to 54, and then, that's where we start to entertain the $50,000 area. You call it 49 or 50, but realistically, the bear market lower high from last cycle at 48 to $50,000, and we have the lower third right in there in between. That would, of course, open up this entire zone, 45.5, which was the close to the swing at 48. To the upside, if we do see the highs broken, 68 to 69K is where the basis band is. And realistically, I'd take the daily and the prior all-time high at 69 to 70 at the weekly as an area to pay attention to. And then 72. And then we've got a little bit of a gap up here. Yes, you can look at the weekly over here at 72.8, $73,000 for a swing. But any closes above 72 and you look 74 to 76 where that upper first is, there is $75,000 in there as well as a kind of median point on lower term timeframes like the daily. And that's where, if it cleared that, then you can entertain 78 to 80 and then potentially up to that monthly at 82.5 again by the upper second. So pretty interesting confluence. Daily, not doing too much, right? It is in a big compression. This will resolve soon. We're We're in the early parts of August, but before you know it's going to be the back half of August. So I would be looking for a move to get started, at least for volatility. And then it's all about the local range highs. 67 to go and test and reclaim the 68 to 70 area would be on expansion to the upside. And then anywhere below the lows here, 62 and a half, on the low side here. And then dropping the actual wick lows would be expansion into the supports down here, 58 to 60, with the potential for more on any break of it on the daily. Now, of course, that would look like playing the bands on the weekly levels that I just showed you. Nothing too crazy here. Daily looks weak. Very, very tight compression. 2-day, still downside angled for a regular stoke. Really, really squeezed up here. Same levels. 3-day, lining up almost perfectly with the overhead 68. Downside, right at the monthly at 59, but any kind of expansion in between, you'll see 69 to 70, and you'll see 58 taken there. 4-day is going to be a little bit more clear here, as the 4-day is starting to line up with the lows at the lower second. So this is expansion down. A little bit of a compression to expansion, ran the bands on both sides. We have the lower second right there at, essentially 58, and then 70,000, 70,500 by the upper bands. 5-day, in the thick of it, mid 50s, 54. We talked about 54 to 56. We got 74 for the upper first there. And right at the highs here, we have the basis for the 5-day. And then, of course, we're back to the weekly, which is right there as well at that 68, 69K. So we just await resolution on the daily. Don't be surprised once initial expansion starts for it to kind of fake out one way or the other. It's not a guarantee, but you need to see the conditions closed above, on the highs, close over close above the highs here, 67.3 is what I would honestly be looking for, and below right around 61, 61.3 on lower term timeframes like the daily. And then we'll likely see on any kind of close over close move the expansion actually get rolling. Beware of it running the bands from one side to the other as we exit the compression. So it's very easy to see it run the bands from top to the bottom side before the real move gets going, or the bottom to the top side before the real move gets going. Trending structure matters. So that's what you want to pay attention to in those times when we do see this move underway. So we'll get rid of, we'll just go to a different chart. Let's go ahead and take a look at oil. We got the move back to the basis. This is set up in a range right now for oil. Look above the basis, looking 84 to right around 86.5 by the highs. And then anywhere above there, looking 88 to 90 by the upper second. If we did see any closes above there, look up to the upper third. Need to see close above 95 to initiate expansion to 98 to 102.5, potentially 105, 106. To the downside, if we do drop the lower first, it can still save itself around the actual lows, around 74 to 76 here. But if it does start to push that lower second, be aware of the lower second on any sweep of the lows here. This is a downtrending structure, so be aware of any sweep to the downside if it does happen. Around 73 that reclaims the low at 74.25 or so. Otherwise, we're looking back to 68 to 70 initially, and then potentially expansion down if it were to head that way. When looking at traditional markets, we'll look at SPY. We have, a higher low in place anywhere below, 767, 765. It can kind of save expansion and continue potentially higher, 780, 785, potentially 790. But if it drops it, I would be looking right back to 755 to 760 as the basis band rises. Now, this is currently at 750, so I would be aware if you see 755 dropped or any of this high side structure dropped. 750 is the name of the game. Down to the gap fill there that was, filled at 745. If that begins to happen, we're looking 738, 740 again pretty quickly thereafter and that would open up the actual low side structure and a structure break. So you want to see continuation essentially from here up to around 780 when this opens up. So otherwise, watch 767, because then it's essentially back to 760, 755, and under down to 750. I'm looking at NASDAQ, pinned 29,856 here, 29,9 area, 29,946 on the high. Does have a higher low locally. You want to see 29,133, 29,2 area hold up, and then a move to around 30,000, 30,200 here to then go run the highs at 30,500 to 600 and start closing above 30,800. Close over close would push things up to, 31, 31 and a half pretty quickly from there. If it does drop the lows and this is a structure break, right? So you have the impulsive move up to test the breakdown area that was a lower high downtrending structure. So we had, downtrending structure here. We put in another lower high, tried for the higher low, and then immediately turned around, lower high, lower low, lower high, lower low. So if we end up here back under 29 to 29.2, which is basically the basis band to this lower high, I would be looking for 28.5 down to 28 again, with the potential for, the mid 27s, 27.3 to 5 down here by the lows. Dow looks, it's a little dicey here. But if it can set the low, it's going to do it on closes above 54.1. If it drops 53.8, it can save itself around 53.550, but I'd be very wary. Likely looking for a retest of 53 to 53.1. If it does come down further than that, pay attention to the basis band around 52.8. You can call it 52.9, 52.8 to 52.9. Because if it does drop that, it's 52.5 and under down to 51.8 to 52. So pay close attention to the risk environment, right? So we do have Dixie back under 100. Did well on the way down for traditional markets, but beware of it holding support around this 99.60. I mentioned this before. You want to see this dropped on closes, and it's not just dailies, but higher term time frame closes. If you see it back above 100 and then 140, that would be mean reversion back to the basis at 151 cents or so. But you're going to see this likely try for 101 again if it does get above there. So beware of that. That's pretty much all I got for you this Monday. Please go ahead and like and share this out there. I hope you watched the Friday video with myself and Tony Severino. It was a great stream. I had a lot of fun. Now, look, I know there was a lot of bearish talk, but it was all conditional, right? It's based on us being in a bear market and what are the worst case scenarios for the bear market. He gave his opinion on what he's looking for. And where his opinion would change as well. So his invalidation. So it's, although the outlook that him and I presented was potentially longer term bearish for Bitcoin in particular, we discussed what would change that view, right? What is the invalidation essentially of that? And, he doesn't have too much of a different outlook than I do. In fact, we have very similar views of where price could potentially go. And then what it would need to do in order to not hit some of those targets in terms of changing structure around the local area as well, or even potentially swings and fake outs, head fakes that could potentially change structure locally that might change that longer term outlook for price action for Bitcoin. But yeah, he's a beast. He's got a ton of knowledge, a ton of experience. I hope you're following him. I hope you go back and watch the stream. And understand what the invalidation of further downside looks like. And then what the potential is for further downside as well, because you should know, even if it doesn't hit it, you should know where those areas are, because much as I've discussed on Spaces today, I discussed a little bit on David's show, not much, but maybe I'll discuss it a little bit more so I can present it to his audience, because obviously he has a different audience than I do. But, you know, I discussed, today, essentially, we're seeing institutions flip long on futures with CME. We've seen the short side of the trade, or short interest on the spot ETFs, kind of evaporate. That doesn't immediately mean that things are going to go up, but what it does mean is here and lower, institutions are net long, and they will continue to be net long, right? They're not going to get net short after going net long in this local area if prices drop. They'll go net long even more in bigger lot sizes as price falls, if it does. Where they would get back into net short is if prices rise aggressively for Bitcoin. So, yeah, please like and share this out there. And then you have a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe. And of course, as always, stay safe. With all that being said, Landy out. Take care.